I think this is a very critical point. So if gold breaks below there, then I think we're going to see it hit 3,600 very quickly. I think it'll be a very quick drop. This 4,000 mark, I think, is very, very critical. Silver really needs to hold 60 or like $61 per ounce. If it can hold that, the long-term bullish picture is pointing to more or less $75 silver, which would bring silver up to about 175. But if silver breaks 61 or $60 per ounce, we're probably going to see a very quick drop down into this $40 mark, which is a 40% haircut from where it is. So we saw the low in gold based on Fibonacci theory from a long-term super cycle of bull market in gold. If gold can hold these levels, we are going to see gold on the next major rally go up to about $8,600, which is pretty darn exciting. The stock market moves up more so first. I think we're still going to see markets, people move into the stock market. Gold will build a base. As the stock market starts to get choppy, money starts to rotate for gold, for safety. The US dollar, the strength of the dollar turning a corner. Well, yeah, I can show you what looks to be unfolding for gold. If we take a look at the chart, let me just pull that up. There's definitely a lot going on, a lot of emotions flying in the precious metal space. This is the daily chart of gold. Let's just zoom back. As you can see here, we did have that precipitous waterfall really started to, I think, test investors and precious metal holders of what is going on, and is gold going to break down and sell off in a big way? If we look at gold and just kind of look at these recent lows, we've got a lot of consolidation through here from late 2025. And then we had a wick low over here where we got into a huge waterfall sell-off, volume ramped up, and then we tested this low just about a week ago. And so this is a very big test. Now there's a couple of scenarios here. Obviously, right now gold is in a downtrend from a short-term standpoint. So if, as a short-term trader, gold is making a series of lower highs, it's making a series of lower lows, and it actually is still pointing to lower pricing. Now, the flip side of that, as a long-term investor, the long-term trend is actually bullish. We've got a very strong uptrend. It's consolidating, meaning it's pulling back in somewhat of a controlled manner, building what could be a launch pad, a bull flag pattern pointing to higher pricing. And so depending what gold does here, and silver is very much similar, there's a very big move pending. And so if we were to look at the bullish in this scenario for gold at this point, let's just go back to the ultimate kind of low that we saw back early in 2025.
Gold and silver investors need to pay very close attention right now because according to market analyst Chris Vermeulen, we're at a make or break moment. Gold is sitting on a critical support level around $4,000, while silver must hold above $60. If these levels fail, both metals could experience a brutal correction. But if they hold, Chris believes we're looking at one of the biggest precious metals rallies in history. Could gold really surge to $8,600 and silver eventually reach $175? Let's break it down.
We saw the low in gold. I love to use a Fibonacci extension. This is based on Fibonacci theory, which is pretty much how the whole universe, the world, everything seems to function. Based on Fibonacci theory telling us the strength of a move to the upside, and then you can figure out how strong or how much the market pulled back to the downside. It tells us where the market naturally is going to want to go. So from a long-term super cycle of bull market in gold, if gold can hold these levels, we are going to see gold on the next major rally go up to about $8,600, which is pretty darn exciting. That is where this whole super cycle in gold is pointing to. One big final euphoric move. Probably something in the world is going to fall apart. Who knows? But there'll probably be a reason for gold rocketing up there at that point. Now, the flip side of that we need to be aware of is also the downside potential, which let's go in and zoom in on this. This is what people need to be aware of. The downside potential using Fibonacci based on the most recent sell-off and the bounce that we've had. This tells us where the downside target is for gold. And that level here is about 3,600. So from where gold is right now, Elijah, we could see gold potentially take about a 15% haircut to that level. And that would actually be a bullish signal long-term. A long-term investor, if we see gold and silver come down to 36, this brings us back to a very unique situation, which is right before we saw gold and silver go into that euphoric kind of parabolic move late last year and early this year. And so the market is very efficient. Whoever got in late, if you weren't in metals and you got sucked into this excitement and you bought up here, the market is likely going to test you. It's going to try to shake you out and come back down and put you underwater or put you back to break even and make you want to get out of it. And then it will take off without you. And so the market is, based on the analysis here, is pointing to it. That's where it wants to naturally go. So I think there's some great opportunity in gold. I think there's potential for it to have a pullback to 3,600 still. Maybe this even happens over the next month or two, and then it rocket higher. But if gold holds these lows, this low that it put in over the past week, and starts to head higher, then we're probably going to 8,600. And there's actually a really interesting chart. If we go back and look at the weekly chart of the S&P 500, so this candlestick chart in the background, red and green, that's the S&P 500 weekly chart. The yellow line is the chart of gold. And what I want to show here is we're kind of going into this phase. The stock market is starting to ramp up. And I think we might have this one more big euphoric kind of move in the stock market, which is going to be like the AI bubble kind of blowing off. Everybody finally piling in who's not in yet, creates a strong move up in the stock market. And this yellow line here is gold. Money's been moving out of gold into stocks. And so gold's been pulling back. And so where I think we are right now in this gold and stock market kind of scenario, I think is actually very similar to what happened over here and where we are in the stock market back in 2007. So let's go back and take a look at what happened back then. If we were to overlay these scenarios, we are in this point here where gold has just pulled back. If we were to think of where we are today, a very sharp pullback. The stock market is pushing higher. We just had a bit of a correction over the past couple of weeks with the stock market. And now the stock market wants to push higher with one last big push. And this was the stock market top before the stock market crashed like 55% almost. What we're looking for now is if gold holds these lows. So if we were thinking of this was today's chart, gold put in these two lows and gold is technically trading like right here. If gold holds these lows where we are right now, it's equivalent to this chart where gold will start to turn up. It will kick back into an uptrend from both a short-term trader and a long-term investor standpoint. And then gold shoots higher to 8,600. The stock market moves up more so first. I think we're still going to see people move into the stock market. Gold will build a base. As the stock market starts to get choppy, money starts to rotate for gold for safety, and then we see a big move to the upside. So that is a really interesting scenario and what could happen before we go off this huge financial reset, which who knows what the trigger will be, what we'll call the financial reset after. We never name it until it's broken, until everybody throws a label on it.
Chris Vermeulen says the precious metals market is sending mixed signals. In the short term, gold remains in a downtrend, making lower highs and lower lows. But from a long-term perspective, the trend is still bullish. What we're seeing could simply be a healthy consolidation before the next major move higher. The key level to watch is $4,000 gold. According to Chris, if gold breaks below that support, a rapid drop toward $3,600 could happen very quickly. Surprisingly, he says such a correction would not destroy the bull market. Instead, it could create the final shakeout that forces late buyers out before the next massive rally begins. Using Fibonacci analysis, Vermeulen believes the long-term supercycle target for gold remains around $8,600 per ounce if support ultimately holds. Silver is showing a very similar setup. The critical level is between $60 and $61 per ounce. If silver can stay above that zone, Chris sees the potential for silver to eventually reach $175 during the next euphoric phase of the bull market. However, if silver breaks below support, he expects a sharp decline toward $40 per ounce, a correction of roughly 40%. Another major factor is the US dollar. Chris warns that the dollar appears to be forming a bullish breakout pattern. If the dollar continues strengthening, it could pressure gold and silver lower in the near term. But if the dollar fails and starts weakening, precious metals could quickly regain momentum. He also sees similarities between today's market environment and what happened before the 2008 financial crisis. His thesis is that stocks may experience one final AI-driven blow-off rally while money continues leaving gold. But once stock market volatility returns, capital could rotate back into precious metals, triggering a powerful move higher. In other words, today's weakness in gold may actually be setting the stage for tomorrow's explosive rally.
But if we were to look at this chart going forward, I can't really squish this gold chart down at this point, I don't think. Let me just see if I can. If we were to squish this chart down, we could see the stock market continue to push up here and then start to get into some volatile market conditions. Gold will start to stabilize and start to turn up. And as the stock market starts to break down and sell off in a big way, we see gold shoot up to that 8,600. So it's a really interesting scenario how this could unfold. And I can feel the tension in the air. I can feel the bubble, the euphoric move with the AI space. Because it's so big, Elijah, it's really dragging the whole market up. And I have the same feeling of what happened earlier this year with precious metals. You could feel the energy, the excitement, the euphoric, but the precious metal space is very tiny. When it comes to AI, it's the whole world. It's every person, every kid, every grandparent is interested in this. So this is not like, this has got a lot more power. This is a big train that's going to be difficult to slow down. I do think it's starting to slow down a little bit. I think we're starting to get people are really piling in, and it's just a matter of time when it runs out. But that's the scenario that I see unfolding. This is the bullish case. We see stocks muscle higher for another couple of months. The precious metals hold their ground, and then we eventually see the precious metals have that one big euphoric the next big euphoric blow-off phase before we see a bigger correction. So, I mean, I know I covered a lot there, but that's the scenario that we need to be aware of, is those two for gold, and silver's, kind of follows suit.
You mentioned the $4,000 level being critical, that gold holds that. So is it your view that really the next couple of weeks of trading could determine whether we go up or down in the short term?
It is. I think this is a very critical point. So if gold breaks below there, then I think we're going to see it hit 3,600 very quickly. I think it'll be a very quick drop. This 4,000 mark, I think, is very, very critical. So for example, like when we look at gold, these blue circles here, this is that 4,000 mark that it really needs to hold. Now, if we're to look at the other side of this, if we were to go and take a look over at the dollar is kind of an inverse picture. We have the dollar testing right up into resistance. And so this is the big question. If the dollar here breaks out and really starts to pop and scream higher, then we're probably going to see 4,000 on gold be broken, and we're going to see gold and silver sell off and head on down towards that $3,600 per ounce level. So right now the dollar is breaking out. I think it's doing the opposite of what Trump wanted. You put war in there, and all of this stuff, it's going to strengthen the dollar. We're starting to see it break out. So watching the dollar, to me, is one of the most important things. You look at the currency market, it's about like 8 times bigger than the stock market. Currencies are global, and we have been seeing, the US dollar, the strength of the dollar, turning a corner. And it has potential to have a very big move to the upside. In fact, if we look at like the monthly chart, the dollar has been channeling up for quite a while. I mean, it has been channeling in this upward direction, and it is carving out a bottom. This little bottom formation that it has right here is very significant. We saw another bottoming formation over here. We had, depending on how you want to look at it, there was a bull flag here, or there was a consolidation. It broke out here. We keep seeing these great big moves to the upside, and the market is primed for a huge rally in the US dollar, which means metals could get hit temporarily. So this is the biggest point, is we just need to see if gold can hold that $4,000 mark, and if the dollar gets rejected and continues to trade sideways, then gold will move higher. Also, if the stock market does scream higher, and we see gold start to take off, it also probably means the dollar is actually having a very sharp breakdown. It will probably come back down into this lower support zone that we saw back in 2020. And back all the way back into 2018. So we are at a very big turning point. It's like make or break it for the next massive move in metals and stocks. The big question is, do things muscle higher and are game changing, or do things break down in a big way? That is the big turning point we're at. I do think long-term gold, is in silver will do very, very well, but there's going to be some weakness along that path.
Now, as for silver, you were looking at silver breaking below that $70 level, getting as low as the low 60s last week, now bouncing a bit here and there. But what are some of the critical levels that you're looking for on silver?
Yeah, so silver is quite a bit the same. It's dipped down into this support level, these lows. It's had a technical bounce, and it is pointing to lower pricing. And when we look at silver and use the Fibonacci price pattern, silver had its initial drop, and then it's had its bounce, and it's working through this whole level. Now, there's some interesting levels here on silver. If we take a look, there's this 618 retracement. That's called the golden ratio. That is the sweet spot for Fibonacci theory. What it means is if price sells off and then has a bounce, it's naturally going to want to move to the 618 level, which it did right here. Typically, if you bounce off that level and pause, you're usually going to go down and hit the 100% level, which is this one mark, so around $40 per ounce. So this is the very critical level for silver. Silver really needs to hold $60 or like $61 per ounce. If it can hold that, the long-term bullish picture is pointing to more or less $75 silver, which would bring silver up to about 175, a very big gain from where it is. But if silver breaks 61 or $60 per ounce, we're probably going to see a very quick drop down into this $40 mark, which is a 40% haircut from where it is. So, I mean, either way, there's a big opportunity. The question is right now, both gold and silver are giving mixed signals. Short term, the trend is down. Long term, the trend is up. We've got the dollar at a critical turning point. We've got wars coming to an end, or, the Strait of Hormuz getting figured out potentially. We've got a lot of things shifting right now. And so we just need to wait and see if silver can hold this level and start to move higher. It will generate us a new buy signal, and we can take advantage of the next leg higher. If silver breaks down, I am expecting it to drop very quickly to $40 per ounce, which I believe will be a steal. That is a point where both for gold and silver, I would be moving in and buying a bunch of physical metals. We did close out our metals at 111, way up here, and we're waiting for the market to reset. The market could trade sideways for many years. It could pull back substantially. Either way, I don't want to hold an asset that is at one point short-term overvalued. I'd rather get in later when it is starting to run again, or get in at a sharp discount and reload. That is the whole strategy I focus on around precious metals. So those are the scenarios. Gold and silver have the same scenarios. We're at a major turning point. The question is, do we get long again when it goes a little bit higher and generates a buy signal? Or do we pick it up at a killer deal when the dollar spikes up and we see precious metals get beat up and short-term oversold?
Chris Vermeulen's message is clear. We're approaching a major turning point. Gold above $4,000 and silver above $60 keep the long-term bullish case alive. But if those levels break, investors should be prepared for significant downside before the next opportunity emerges. Either way, Chris believes the biggest moves in precious metals are still ahead. Do you think gold is headed to $8,600 and silver to $175? Let me know in the comments below. And if you enjoyed this analysis, don't forget to like, subscribe, and turn on notifications so you never miss the next precious metals update.